Hey guys, welcome back to my channel. How are you all doing? Hope you guys have had a great week this past week, as the market gave us plenty of opportunities to capitalize on. In this video, I want to talk about my analysis for four major pairs: gold, euro USD, GBPUSD, and GBPJPY. And as usual, I'll start up with gold from the weekly time frame and work my way down to the 4-hour time frame. Now, on the weekly time frame, we can see from this past weekly candle how strong sellers were in the market, forming this very strong bearish candle, which is a very strong indication that price would most likely continue to the downside. So it shows a lot of selling pressure, especially when it happened around this resistance area. That's the 190, the 1790, 1800 area. And now expecting price to continue this bearish momentum, possibly breaking through this resistance area here all the way back down to the 1680 area. Also, if we use our Fibonacci retracement, we can see that if we draw a swing high to a swing low, this area falls perfectly at the 61.8% Fibonacci retracement, which is the golden ratio. And you can see price reversing from there down to that level. So again, which confirms mostly our sell trade. This past week, the last video that I put out, I mentioned that I was expecting price to continue to the downside following this formation of this bearish candle here, this strong bearish candle, which broke below this resistance area as well as this trend line. And that's when I entered my trade, and currently around 280 pips in profit. Again, on the 4-hour time frame, we can see that we've gotten to this area here. We're expecting price to get into this zone, and then what we'll be looking for in the coming week is a price reaction to this area here. Okay, so when price gets into this zone, one of two things can happen: either price bounces to the upside, okay, or price breaks that level and then continues to the downside. All right. So when price gets in there, we have to be very patient. Okay, so price can form in two ways. Okay, or four ways, I would say. Two for a bearish move and two for a bullish move. So the two bearish move, for example, you can have a very strong bearish candle break through this area and then close below very strongly. Okay, so something similar to this. All right, or this. If that happens, price may not retest this area, and then you need to enter your sell trade immediately and continue that sell trade to the downside. Okay, if on the other hand price just trickles down a bit from this level, trickles all the way here, and then starts to reverse again, then when price enters back into the zone, we should look for our sell trade from here. So looking for a sell signal, maybe a bearish pin bar or bearish engulfing candle, or a bearish inside bar, and take our sell trade to the downside. Okay, which is what I'm expecting based on the fact that price has formed this very strong bullish bearish candle. Okay, now on the daily time frame as well, to confirm, either maybe on Monday or Tuesday, if that candle that breaks through this resistance area is a strong candle like this one as well, or something like this, right, and breaks and closes below that area, we wouldn't really expect much retracement, and then price may just continue all the way to the downside. So if that happens, then we should be looking to take our down trade. Rather, if price breaks this zone the way it breaks it here, then we may have a retracement into that area, and then we'll look out for our sell trade to the downside. All right, and then we'll look for the same thing on the 4-hour time frame. So generally speaking, for gold, I am bearish on the market, but again, we'll be waiting for price to break through this support area before entering that bearish trade. On the other hand, from here, price may get into the zone and give us a bullish signal, and then if that happens, we'll be looking to take our buy trades to the upside. But I wouldn't really rush into taking any buy trade despite the buy signal. What I would do personally is to wait for a break of a trend line. So this trend line here, take it all the way up there. Okay, so until this trend line here is broken before I would enter my trade. So I will just be trading the trend line break just to play it safe and confirm that indeed price is going to the upside. And the reason why I'm playing it safe is because price could get up to this area here, get to this trend line, and then bounce to the downside. Okay, So that is very possible that can happen. So that's why I will wait for this trend line to break, and then I will trade the trend line break. All right. So this is my analysis for gold for the upcoming week. I hope you found this video you found the analysis very helpful. Next, I will be talking about my analysis for Euro USD. And again, with Euro USD, starting off with the weekly time frame, I'll work my way down to the 4-hour time frame. Now, on the weekly time frame, we can see as well, price has been strongly bearish, making this lower highs and lower lows. And then this past couple of weeks, price got to this resistance area here around the 1.036 area, and then bounced off to the downside. You can see that also coincided with the top of this channel as well. And then last week, you can see this very strong bearish candle which broke this resistance area, which for me that confirms the continuation of a sell move. So now that we know the confirmation on the weekly time frame, we know what the trend is been forming, this higher lower highs and lower lows. And now price has, you can see this Thursday candle, this bearish candle strongly broke through and then continued that bearish move. So that is what I'm expecting in the coming week, for price to continue at least all the way down to the 0.995 area. And then we'll see, and that's what the area that coincides with this previous low. So we'll see if price breaks that previous low, and then we'll be looking to enter more sell trades from there. Okay, and if we go to our daily our 4-hour candle, we can see that as well. So if you're not in this trade already, no need to panic. All we need to do is to wait for price to get to that low around the 0.995 area. We'll wait for price to break it. Okay, right, wait for a retest, and then if price gives us a sell signal, we can enter our sell trades to the downside. Okay, again, this the break may not be like a small break and then trickles down and comes back to retest. It may be a very strong bearish candle that could break that area, and if it does, something like this one over here, okay, so a strong bearish candle like this, if that's what breaks this level, then we shouldn't really expect a retest of that area, and we should just enter our trade immediately, because price will most likely continue to the downside. Now, as it is now, it's still possible for us to enter the trade, but that is only if price decides to form a sort of range. So if you go to the hourly time frame, for example, so we can see price breaking through this area from up there, comes down to range a bit. You can see it ranging, right, and then came all the way down. So it's possible that price could range a bit as well in this area like this, okay, before going to the downside. So if the market opens and price starts to range, all you need to do is to identify that range, draw the triangular pattern there on that range, and wait for the breakout of that particular range. And once the price breaks out, you can really enter your trade there and capitalize on that move. If not, if you're not confident enough to do that, then I would advise you wait until price gets to this support area here and see how price reacts to it. But generally speaking, just like gold, I am bearish on Euro USD. Next, I'm going to talk about GBPUSD as well. Again, from the weekly time frame, and work my way down to the 4-hour time frame. So just like gold and Euro USD, GBPUSD as well has been strongly bearish. You can see it forming these higher lower highs and lower lows, and lower highs and lower lows as well. And then this past week, I remember saying that price has formed this M pattern, or it's about to form this M pattern, and then we'll take our trade once the neck of that M pattern breaks. And that is exactly what has played out, as we can see on the daily time frame. So we can see the neck here, waited for price. Price seemed as if it was going to continue to the upside, but eventually, price couldn't continue, as sellers were able to push price down below that neck, and I was able to capitalize on that move as well, giving us another 200 pips on that trade. And if we go to the 4-hour time frame, we can see that clearly as well. Everything that has played out so far, and price breaking this level again, this will have been another opportunity to enter more positions into your trade. So at this point, we are already at a support level now. Price has gotten down to the support level. So what we are going to do is just to see how price reacts to this area. So and you know the possibilities already. If you've been with me for some time, you know that there are always two possibilities: either price bounces to the upside from that level, or price breaks and then continue to the downside. Okay, we will trade the break, just like I've spoken earlier in the other chats. If price breaks it strongly, okay, with a very strong bearish candle, most likely there wouldn't be a retest and price will continue straight to the downside. But if price breaks it, but not, not with a very strong candle, then you could expect a retest, and then you can look to enter your trade from there. Okay, again, even if price retraces here, when it gets down to this level, it may just retrace up to this area here, the 1.193 area, and gives us a sell signal to take to the downside, because we know from the daily time frame and the 4-hour time frame that price is in a strong downtrend. So trading against the trend is not advisable, even if you're trying to do it on a short-term level. I would advise that you always trade with the trend. So if our main trend on the weekly time frame is bearish, on the daily time frame is bearish, then whatever we're doing on the 4-hour time frame, we know that we will just be taking only sell trades for the time being, and whatever buy trade occurs would most likely be a retracement. So that is my analysis for GBP/USD. I am bearish on it, and I'll just be looking for my sells only, and the same thing applies to EURUSD and gold as well. So finally, in this video, I am going to talk about my analysis for GBPJPY. I haven't really traded GBPJPY in the last couple of weeks, as I've mentioned previously, mainly because of this wicks happening. You can see every time price gets into the zone, quickly wicks and then comes back down, and the same thing happens lower down as well. So looking at this chart holistically, you can see that there is this sort of M pattern forming here, right? So normally we would expect price to get to this 158 area and then possibly break the neck and continue all the way down as well, which is very, very possible actually. But because of all these wicks forming, I've been very careful with this trade, especially when price gets to the 162 area. Price seems to reject off that area and not close below it, as we can see over the last couple of months. That's every time price wicks there, ends up closing above that area at the end of the week. But if by chance any weekly time candle ends up closing strongly bearish, breaking below that 162 area and closing below it, and then most likely price would continue to the downside. As you can see, no price has closed below that area in a while. Has wicked through it, but hasn't closed below it on the weekly time frame. So any weekly candle that closes below that area would indicate that price would continue to the downside. Now, if we go to the daily time frame, we can see price still, more or less ranging between these areas. You can see entering gets in there, forms this lower high again, it gets in there, forms another lower high again, gets in there, forms another lower high. So it is forming lower highs, but it's still maintaining itself around the resistance area of the 160 level. So anytime price gets into that 160 area, there's a quick rejection to the upside, and then this could come down again to break this area. So if this area breaks on the short term, you can trade it to the 158 area. But for me, I'm just going to wait until price gets into this 158 area before I do any if I trade this pair. So I'm just going to be patient and wait for GBPJPY to enter into the area that I wanted to enter into. I'm not going to rush to do anything drastic for the time being, because there's just a lot of uncertainty in this market. But if you wish to trade it, you can always do that on a smaller time frame and still get some pips, but I would advise to stay away from it for now. So this has been my analysis for the 4 major pairs. I hope this video has been very helpful to you. If it has, kindly leave a like, and if you haven't subscribed, kindly subscribe to the channel for more analysis videos. Thank you very much for watching, and have a great week ahead. Peace.
I can't forget the day we met. Your eyes so blue, me piercing through. I can't forget